Hi, I'm Carl Weisecker, Principal Broker at Klein May Realty. Thank you for joining me again for Q&A with Klein May. Our question for today comes up quite often, and that is, why haven't interest rates dropped? Mortgage interest rates specifically. About a month ago, 6 weeks ago, the Federal Reserve announced a huge rate cut, and even though that's not directly tied to mortgage rates, a lot of folks expected that rates would drop, which they did. The mortgage lenders were a little bit ahead of that. They knew it was coming, so they were starting to build that anticipated decrease into their rates. Rates dropped and are still quite a bit lower than they were, say, a year ago. But then they stopped dropping and they started going back up again. And folks are asking us why that is. And I think the biggest thing that's important to understand is that mortgage interest rates are not specifically tied to the federal funds rate. They are much more closely linked to the bond market. When mortgages are sold, the banks bundle all of that debt up and sell it as a financial instrument so they can get some more money to make some more loans. And those mortgage bonds are in the same financial market as Treasury bonds. So the best way to know what's going to happen with mortgage rates is to follow the 10-year Treasury bond. That dropped for a while and is now going up again, mainly because when there is stability or strength in the economy, investors tend to put their money into stocks. When there is some uncertainty, they tend to put their money into bonds because that's a bit safer. When folks put their money into bonds, that actually drives the rate down. That's not happening now. Our job reports have been great. Inflation is coming down and is almost at the Fed's target rate of 2%. And so investors are pushing money into the stock market, not into the bond market. And so those folks with bonds have to keep offering higher and higher rates of return to attract those investors. So mortgage rates are going up, ironically, because our economy is so strong. Most experts do predict that rates will drop and they will get below 6% at some point next year. I wouldn't expect anything close to the 2.5% or 3% numbers we have seen in the past. Most experts are saying they expect things to settle in around 5.5%. Probably not until the spring. The important thing to remember is if you want to see what's going to happen with mortgage rates in a week or two, see which direction the returns on the 10-year Treasury bond are going now. Today we are at Magpie Diner, not only for the coffee, but for the delicious food. And I chose their Chorizo Bowl, which is absolutely out of this world. Potatoes, chorizo, some good veggies, and a perfectly cooked fried egg on top. If that sounds like something you'd be interested in, I'd highly recommend you get down here and try one. If you've got a restaurant you'd like to see me try, or a real estate question for me, please send that to questions@kleinmay.com. Thanks so much for watching. I'll see you next time.